Barstool Sports, a company that is quickly rising within the media world, recently announced that Penn National Gaming, known by their stock ticker PENN, is purchasing a 36% stake in the business, expanding its reach outside the gambling sphere. With this massive purchase, I wanted to break down the deal and what it means to investors looking to cash in on this massive announcement. With this additional investor, Barstool equity looks like this: 36% Penn National, 36% Sharing Group, and 26% Barstool employees. It's widely believed that a large portion of this 26% belongs to the company's founder and head of content, Dave Portnoy. If we assume his equity is a mere 16% of the total, Dave Portnoy is now effectively worth $72 million. Quite an impressive feat for a man who had nothing more than a dream 20 years ago. To understand this purchase, we have to go back in history and understand what Barstool is and where it's most likely going. Founded by the infamous Dave Portnoy back in 2003, its humble origins as a small local newspaper publication have now all but been forgotten. Barstool today is easily one of the fastest growing media companies in the United States, captivating the minds of Americans who seek a new style of content that is authentic, entertaining, and diverse. With dozens of highly successful podcasts, blogs, sports shows, and partnerships, Barstool has catapulted to the top, threatening an established and entrenched media market that is slow to change with the times. The man pushing this train to the top of the mountain, Dave Portnoy, has proven to be a pioneer, breaking down traditional media and growing his empire from a market evaluation of 0 in 2003 to $450 million in 17 years. Outspoken and sometimes seen as outlandish, Dave is without a doubt a game changer and an incredibly smart businessman whose talent for content creation, hiring, and overall strategy development have been paramount to the success of the company. Once seen as a joke, Barstool is now on its way to a $1 billion evaluation, thanks to its leader and his dedication for doing things outside the box, implementing ideas and strategies that other media companies would laugh at. Obviously, a large portion of the identity of Barstool is tied to sports, and what began as just a part of Dave's personality has now morphed into a legitimate business strategy. Going back to its humble beginnings, Barstool and gambling have always been paired. Recreational sports betting has forever been a part of the company's identity, and in recent times, this has grown into a real business opportunity. Following the Supreme Court decision to legalize sports betting, states have now slowly begun one by one to open their borders for real legitimate sportsbooks to come in and do business. Whether by accident or on purpose, most likely the latter, the company has aggressively pushed gambling-related content in the past year. With so much of its audience male and young, there is no better group of customers to convert to recreational sports gamblers than those Barstool has. Penn National, whose market cap exceeds $3.3 billion, is poised to expand its sports gambling business further, and its 36% stake in Barstool makes sense from a business perspective. With millions of readers who are primed for conversion, Penn and Barstool can together grow, benefiting from one another. Barstool has already announced an online gaming app that is set to be released in August and a brick-and-mortar Barstool Sportsbook. As of today, 11 states have legalized sports betting, and 39 more will surely look to follow in the near future, a trend that will see billions of dollars pour into the industry as states look for more and more tax revenues to fuel ever-expanding budgets. The sports betting golden age is coming, and this move is a simple way to prepare for it. Penn National is now ready to capture all the money that will result from the millions of people exploring a new legal way to make sports more exciting without jetting off to Vegas. Their new CEO, Jay Snowden, sees this vision, and while he may have appeared to overpay for his stake to some, to many this move is relatively brilliant, diversifying his company while increasing its customer base. Without Barstool, Penn's name recognition is relatively poor, serving as a parent company to properties around America. There really isn't a lot of people who identify with the brand. Now, with the sole right to utilize the Barstool sports brand for all the company's online and retail sports betting and casino products, this will soon change. However, this move does not come without risks. As mentioned earlier, there is now a large vacuum in the sports betting space with billions of dollars at stake. As legalization continues, companies are poised to jump into the market and begin competing, lowering already low margins, making sports betting a tough business to be in. The saying is, the house always wins, and that is definitely true, but with so many houses entering the market, the margins are sure to be lower, especially in the sports betting business, where profits are usually not as high as other forms of gaming revenue, like table games or slots. Penn National understands this. They outright acknowledge it in their 2018 annual report, where they say, quote, "Gaming competition is intense in most of the markets where we operate. Recently, there has been additional significant competition in our markets as a result of the upgrading or expansion of facilities by existing market participants, the entrance of new gaming participants into a market, and legislative changes." Overall, the business of sports betting is an unusual one, and with profit margins varying highly due to a number of factors including tax rates, handle, and vig charged. In this complex world where competition is sure to be fierce, the downside is that brand recognition only goes so far as customers have proved that they are more likely to flock to companies offering the best promos and odds. Barstool will without a doubt grow with this move, but the bread and butter of the company is content creation, and that is really what I believe will drive the business to new levels. The Penn National deal leaves Dave with at the very most 10 to 16% equity, meaning he will have to work much harder if he wants to push his wealth into the billion-dollar level. Outside investment now makes up a very large chunk of the structure, with Sharing Group and Penn National sucking up nearly 3/4 of the equity in the company. In the next 5 years, with this continued exponential growth, Barstool will without a doubt reach the billion-dollar evaluation, and with that, Penn National will surely reach new levels as well. Given there isn't a major recession looming in the near future, I would be buying Penn right now as they hold a rocket underneath their hood, rising by the day. Barstool will succeed with or without a successful sportsbook, as it's pretty much well understood that the meat of the company lies in their content creation. Traditional media outlets are fading as millennials and the generation beneath them gets older and they push out politically correct, washed up, cookie cutter outlets. As outlandish it is to say it, I have no doubts that Dave Portnoy and other leaders at Barstool truly believe they can compete with giants like ESPN and Turner in the coming years. And following recent trends, I would say it's only a matter of time. Either way, thank you guys for watching the video, and make sure you hit that subscribe button if you enjoyed the video and want to see more financial videos to come.